Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier. This is the weekly wrap. Today, we're going to go over a few of those trades that we took earlier today that panned out very, very well. We were going over that RSI 9 EMA trade with the NQ futures, which was absolutely fantastic. We've also had a pendulum trade for the Euro USD that worked out pretty well. It traded in the green for a long time. We're going to take a look at that. Also, we got a new trade ID out for the Kiwi. That was posted just a little while ago, and so I'm definitely looking to recap that one. Nice move in the Great Britain pound Japanese yen. We also have U.S. oil making a move towards a serious resistance zone. I'm not sure that we get there today, but early next week, just remember that anything can happen, especially with regards to our geopolitical situation and a whole lot of different stuff. So, Jay Ski, good to see you over on YouTube. Bobby Bob, always a pleasure. WTI just moving sideways. Yeah, it's sort of in rotation, but the biggest thing I would remember with WTI is the weekend news cycle can be huge. Dibble, good to see you, Dibble. Thank you for the screenshots. I appreciate you figuring that out. Really a fascinating look into the markets. Good creativity. Well done. Let's get started. All right, here we go. This was the trade that we outlined earlier today, and what this was just a real basic look. Just a real basic look at, we don't need the dome, real basic look at a strategy that, you know, is simple. 9 EMA. Mark Corb, good to see you. 9 EMA strategy. Confirmation with RSI. This was our trade. We sat there. We were hoping it would set up right there. That right there was going to be your sell. We sold right there. Our RSI indicator had this thing in overbought territory. And as you can see, our stop loss, I highly recommend, especially on short time frames like a 1 minute, definitely be looking to put your stop loss above that previous swing high. And this thing, it took a little bit to work, but it really did work. So, I mean, I was very happy with the way that this thing produced. We did have that RSI confirmation, and then you had the nice sell right there. Sort of drew against us, but remember, 1 minute chart's very tight, and then we got our move. Got our move down to a take profit of 1-to-1 and probably a 1-to-2 down there. So, you know, as we move forward in time, I would definitely be thinking of looking at a strategy like that if you don't know anything about trading and you need one. If you need one, 9 EMA, very popular on YouTube, clearly, but you put a little confirmation in there, that RSI confirmation, or maybe you want to use crossovers, or maybe you want to use something like order blocks or market structure or whatever. You can make these things go. Just remember, they're always just a place to really start out, and that's what we want to do. We want to get everybody off on the right foot. Pendulum strategy right here, Euro USD, fascinating stuff, sort of exactly what I was looking for, to be honest with you. Right there was our PPI bar. We're going to cover PPI in just a second. Spike low, spike high. Right there was your test of that top side resistance, and then your sell-off. Traded almost to your profit target there. It's only about 10 pips, and now you're still in the green. So, you know, if you want to let this one run, let it run. It's completely up to you. I would be a bit cautious going into the weekend. I would want to get either my profit target hit or my stop loss hit before we sign off today for the Forex close. The reason why is it's only a 10 pip thing. All right, this shouldn't make or break you. You're not going to make a fortune. You're not building empires on 10-pip trades realistically. Well, at least not one 10-pip trade, maybe 1,000 of them. Yeah, you can build an empire doing that. But what I don't want anybody to do is take a pendulum trade home, which is a scalp in a day trade, or very simple. This is easy stuff, something that's not supposed to bring us ulcers and drama and all that. And the last thing I would want to see anybody do is take a small trade like this home for the weekend just to see something crazy happen with your news cycle. And we are in Looney Tune times. Anything can happen in our news cycle, and see maybe a gap way up or a gap way down. And remember that when you take these things home, if in fact the market opens up or down, you're not going to get filled. Your stop losses aren't going to get filled. You're going to be on the hook for that money. So definitely, if you're still playing this one, if you're playing this trade out, let it unfold. Probably through the last 4 hours of the session, see what happens. Either you'll get stopped or you'll get paid, and then I would just exit. I would just exit the market no matter what, even if I was down or up, because those stops, typically those stop orders are stop market orders. And what that means, it's going to mean two things. Number one, when this thing, if it opened way up here, it's going to fill you immediately at the best market price. All right, you could be on the hook for a lot of money in that way. Or if it's a stop limit order, meaning you want exactly your price, you may not get filled at all. You may have a situation where all of a sudden the market opens here at 109.90 and you're on the hook for an extra 42 pips or 32 pips. And if that's the case and you used a lot of leverage, You could lose a lot of money doing that. That's one of the tricks of the trade. You got to understand exactly what happens when the market closes and it reopens. During the week, we don't really have a big discrepancy in the Forex. Weekends, though, things like commodity, things like major pairs, this thing can open anywhere. There are no rules. There's no guarantees. So never take a small trade and make it a big loss. You don't want to do that. But it could go in your favor as well, and you might win a bunch of money. I call those luck. One thing you can't do is you can't build an empire on luck. So I always take luck when it's available, but you don't depend on luck. You just can't. It's like depending on quarterbacks that throw a lot of interceptions. You can't do it. Eventually, they're going to throw a pick and bury you. Let me see, Jay Ski, how do you set that graph outlining those levels for the pendulum? Good question. We'll cover that real fast. Basically, what we're doing is Fibonacci retracements. I've already got a template built. It's called the pendulum. And that just gives you the levels. Now, what that is essentially is you just click on the settings of that Fibonacci retracement, and you go to whichever ones that you want to see. So in this case, for the pendulum, you want to have a 0 and a 1. Those are the outside support and resistance. And then you want the 10% level, the 50, and the 90. And that'll set you up a nice little bracket that's really easy to use. So I like that one a lot. It really comes in handy when you're doing pendulums. One less thing. Any math that you can take out of this equation, do it. So that's how we do that. Switch markets, double your deposit with our 100% credit bonus. Covered that ad nauseum this week. Trade follow-up. I want to do this trade follow-up because we have a situation here where I put out a trade idea that's a pretty good one. But this trade right here from this Euro Kiwi came into view. Didn't really develop the way that we wanted to. And what I mean by that is it just isn't. It didn't develop. It didn't go far enough for us to trade it, and that's a tough thing. But when we're trading, that's the game, and the game is don't get in when you don't have a setup. So this Euro Kiwi was sort of a big mover and a shaker, and this is one of those that here it is. We didn't really get it. And disappointed in that. Really am. I thought we were going to have a nice chance at that. And, even though price went to 180.70, 182 up there is just a fantastic sell. And that was sort of our trade idea. So I'm watching this closely for next week. Remember, ECB next Thursday is going to be our big mover and shaker. I'm still watching this one relatively closely here for this Euro NZD. But as far as trading these macro levels and these price points, I would probably wait a little bit. I think that if we do get that bullish extension, I'm confident selling up underneath 182s is going to be a winner. I just really wanted to see if we could get it this week. Now, as far as what else could you do? Well, you have a bullish month, and you sort of have a 2-week range now that we could sort of focus on and maybe buy into this thing with a little bit of confidence. And right here, you've got a pretty good daily. You've got a pretty good a daily look at this currency pair right there. Not quite a spike low 70.70. Nope, not quite. So your Fibonacci's are going to run. Let's take a look at right there as well. Okay, right there's where your Fibonacci is going to start. It's tight. It really is tight. These spike lows, these swing lows, you really want to be cognizant of that, especially on the time frame you're working with. In any case, right there, we got to get back to my golden zone, which is just get my template going here. I like templates. Templates make things a lot easier. So right here, here's your golden zone, and what do we have? We have a buy setting up right there from about 178.70. I wouldn't be too afraid of that. Would I want to shade that much? No, you go with 72 or 75. You could do that. That's not a bad trade. But once again, you're just looking for 25 pips. I'd call that a scalp using that daily time frame. I think it's a pretty good trade, though, so you'll have a chance to beat that one. The last one I'm going to look at for a Kiwi pair, this is a trade idea that I put out a bit earlier today. It's not too bad. Really isn't too bad. I love this market structure. If you read the write-up inside the trading room, and if you just follow me, if you're brand new to the room, just click on the coaches and follow us, and you'll get a email blast right to your inbox, and you'll get 2 of these trade ideas a day. When Connor's back on Monday, he'll be doing one, and then I always do one as well. Spike high, spike low, Kiwi dollar. Love that level right there. 38%, 61.76. Take a look at what else you got there. 13-day EMA at 61.73. So I sort of expect that EMA to open next week right in this vicinity. And I believe we went with, 69 sells, something like that. It's all written up in the key levels for you. And that should be a relatively strong scalp. If we get a chance to hit that, could be very good. Now remember, next week, there is nothing really happening news-wise. We've got the ECB coming out Thursday. That's going to be really our key event. But other than that, it's what I call sort of a real routine week. We're going to have an opportunity to trade price action without having a huge market driver come across the blocks every 5 minutes. That's great. I mean, this week we had a lot of market drivers. We had CPI, we had PPI, we had the FOMC minutes. It was a bit of a challenge to really figure out what the dollar was going to do at any given moment. We're not going to have that problem next week. There's nothing really out there that's going to shake the dollar up too badly. So I'm interested in really getting in there and maybe taking some positions, maybe taking some swing trades. I like the idea that if in fact the price gets to our price points, we're going to have a great shot. We have a great shot. Let's see. J Ski, awesome. Thank you. Makes that easier. Yeah, build templates any way you can. Anything to save time and anything to take math out of the equation. I mean, I'm old school. I still use my old Casio calculator when I'm figuring out range numbers and pivot points and things. But pretty much everything you can automate now, and whatever you can automate it. That can make it, because it frees up bandwidth to do something else. So in any case, this was the week that was. FOMC minutes, CPI live, US PPI. Monday, Tuesday, quiet. Wednesday, Thursday, Friday have been very active, and it's all has to do with inflation, our inflation expectations. Here's the US PPI report from earlier today. And now remember, PPI is just universal. Good to see you. The PPI report is just inflation from the producer's perspective. That's it. So when we look at something like this, it's not quite as important as CPI because CPI hits us. PPI, I think, is a more reliable view of inflation because the price that producers are paying, you get into situations where you can't avoid it. That inflation's baked into the cake. Let me see. AS, yeah. Do I trade news live? Absolutely. We've done it twice this week. I believe. No, we did it NFP live and then we did CPI live. So yeah, we absolutely do that. Check out your local listings. Pretty much if there's a big news event, we'll be on trading it. Core PPI, though, came in a little bit above expectations for the year. Flat, fell a little bit month over month. But PPI fell to 0.0%, down from 0.2% and beneath expectations. So when we look at something like that, we say, is that a major downtick? And I would say no, we expected it to come down, but it's better than CPI. It's better than CPI. JC, good to see you, JC. It's better than the CPI figure, so we're definitely flat with inflation. I think that that was a positive reading, and when we look at the U.S. dollar, we're trading, relatively sideways. I mean, this is exactly what happens when you get into a real hot news cycle where you got a CPI report. There's your daily doji, and then today we got a PPI. That's another doji, and inside doji, remember those double dojis, not necessarily uncommon with this DXY, this dollar index. There's one right there. Another one right there. What does that mean? Technically, a double doji formation is a reversal formation. You can see that didn't happen there. That almost just turned into like a pennant or a flag. Run, rotate, break. And why did it? We had a long-term, really a long-term inflection point at 102.60. I'm not going to cover that for now. But the real question is where does this market go from here? Where does the dollar go from here? Does it go higher or lower? I think it's going to flatline. I think we're going to chop sideways and have a real beautiful trading week next week. No huge news events to shake us up. And we also have really an opportunity to maybe trade some rotational markets, things like the pendulum, things like pivot points, ranges numbers. Those could all go huge. So back to PPI, you'll notice the impact of inflation is huge. We're seeing huge two-way action on these reports. There was a lot of participation today. Some of it got pretty volatile. We're going to look at some of the U.S. indices in a minute, but all in all, this wasn't the worst situation we've ever seen out of PPI. Let's go ahead and take a look. Producer price in the United States increased to 145.17 in September from 145.10 in August of 2024, reaching an all-time high of 145.17 in September of 2024. So even though we're really seeing the media paint this one with a positive brush, they really are. They're painting this and saying, oh, yeah, hey, PPI came down, less than expected, yada, yada. You still have inflation. You still have inflation, and it's dreadful. This is what happened at the beginning of the year. Last fall, we thought we had this problem licked. We didn't. And by we, I mean the economy, the global economy, the central bankers. They thought they won right there. They didn't win anything. And we've got a nice 45-degree angle. You'll notice PPI has a tendency to flatten out a little bit, while CPI doesn't. But it's a 2-month pattern, guys, and it's very obvious. Bang, bang, we're flat, and then we just rise. Bang, bang, flat. Bang, bang, flat, rise. I mean, that's the pattern. Nothing is under control, not even close. Last thing, historical context. Going back to 2010, I've said that, made this point over and over again, but I really want to make it every single time we talk about inflation. You'll notice this PPI is just sort of ranging around. It certainly is growing. There's a pullback there. There's certainly growing. There's a big pullback on COVID, but the way that things have absolutely exploded after COVID suggests there's still a tremendous amount of slack and extra money in the system, and that all goes back to that all goes back to unlimited quantitative easing and a lot of the things that the federal government and the stimulus packages and the U.S. Federal Reserve did to stave off the catastrophe of COVID. So for me, I look at those charts and I say, you guys have done nothing. Take the air out of it. Take the air out of the football. You got to restore pricing stability. I don't care. They think that today's positive, and it just isn't. It just flat out isn't. I mean, you'll notice the dollar, we really don't know what to do now. Policy is definitely shaken up. There's your headlines. Wholesale prices were flat in September, below expectations. And I go, come on. I mean, they were below expectations, but our expectations are skewed. That's it. That's all we got to say. And then you got the big story right there. Dow jumps 300 points. S&P rises to record to close out the fifth straight winning week. But take a look at that. 10-year Treasury yield floats around 4.1 after a big jump. So something's got to give. Typically, bonds in the stock market don't all go up. Something has to give. And I think we're going to see it later this year. And then the last story you could read if you wanted was Jamie Dimon says geopolitical risks are surging. Conditions are treacherous and getting worse. I think we all know that. We know that there's a tremendous amount of uncertainty. U.S. elections, one of them. Russia, Ukraine, number two. Israel, Hamas, Iran. Good Lord. There's so much on the front and back and side burners that we don't really know what's going to happen. Everybody knows it. So the idea that we're still buying stocks is really something, especially with the U.S. dollar sort of being where it is, which is right around 103. Big week for the dollar. I mean, if you want to really take a look at the chart right there, that's a big week. What do you got there? 0.35%. That's solid. How about here? 2%. Dollar's on the march. And the fact that we haven't seen the big pullbacks in something like the Dow or the S&P is absolutely crazy. So we're going to go ahead and look at the US 30 now. We haven't looked at the US 30 in a while and sort of show you exactly what's happening price action-wise from a weekly perspective. We're all-time highs. All-time highs. Something to think about. Let me see. Jay Ski, do you think this is a precursor to an economic recession? Yes, I do. I think that the Fed overshot in a big, big way, cutting interest rates by a half point. It'll go down as being a mistake. I think they're going to have to walk back the rate cut talk as much as they don't want to, especially not during an election season. You're not going to hear any of this before the election. You got an election, 3 weeks out now, 4 weeks out here in the United States? The Fed's not going to come out and say we made a mistake and we have to raise interest rates. That will not happen. What will happen is after the election, and whoever wins is going to be handed this issue. Well, we're going to have to hold rates higher. Well, we may have to have an emergency rate hike, something like that, because as soon as that happens, then the markets really sell off. And the geopolitical quotient or component of all this can't be overlooked. That's probably, fundamentally, if you have things like wars, things like terror attacks breaking out, and a lot of us believe that stuff's inevitable, if in fact that does happen, we have a major correction. How do we really justify in this environment a Dow 30 that's at all-time highs? You'll notice that this chart right here, this is a monthly chart of US 30, looks a lot like our inflation chart, doesn't it? Is there a correlation there? Heck yeah, there's a correlation. A lot of that money, a lot of all that COVID money and all that stimulus money and all that, all the cheap 0% loans people were getting and the disaster loans and all the money, the programs that the companies were pulling off of to get extra capital to work. It's clear that a lot of it wound up in the market. There's no denying that, and anybody that denies that is in denial. This is almost a spitting image of our inflation chart. So at some point, you're going to have to get inflation down to 2%. You're going to have to. If not, it would be an abject failure by the central banks. And I would say that march to 2% has got to lead to a correction. So are the markets overbought? Yeah, it has to. Let me see. Mark Corp. Will DT, Donald Trump, increase the rates? He's not going to have much to say about it. Trump's not going to have much to say about interest rates. He's going to have to go along for the ride. And if, in fact, Trump does win, that's going to be a point of contention. He's going to constantly be knocking heads with the Federal Reserve because one of Trump's big things is economic growth, and we want your 401ks up, and we want to build. Well, you need money to do all that. And if, in fact, you do raise interest rates or hold them higher or maybe walk back a lot of the rate cut talk that's clearly a year premature, if that is the case, you'll see a recession based on rate hikes or maybe just holding rates static. So will he increase rates? He's not going to have a choice. Neither president's going to have a choice. Harris won't have a choice, but they'll increase government spending or something. That's pretty. Both of them are going to spend a lot of money if they're elected. It's just where you spend it. That's really the question. In any case, there's your monthly chart right here. Number one thing I always look at in a trending market, and this is a good look at your US 30 CFD. I love big round numbers because right now, no one in the world knows what this stuff's worth. It's very basic analysis, but it's solid for a couple of reasons. In a trend, we don't know what anything's worth, and I can prove it to you. Right here, we sort of stopped out. We had a lot of compression around 35,000. Compression, then we broke. We said, okay, 35,000 is the top. Then bang, we start rising. Look where the compression develops again, 35,000. Okay, how about this? Where'd this sell-off come from? Just beneath 40. People are betting the tops. What's this top right here? 36? Thinking 35, maybe 37.50. That's the top. A lot of bets came in trying to pick the top. They got wiped out. How about this one right here? 40,000. Everybody put their back against 40,000 and sold. That didn't work. 41,000 meant nothing. 42, 42.5, 45. We'll see some sellers up here. But to think that we're not going there, clearly we're going there. Pop goes the bubble. As soon as this is the everything bubble. We will see things pop, and I think that it begins to happen after the election. This thing begins to really unwind. And can it be done in an orderly fashion? I don't know. That's just speculation. US 500, same thing. Same thing. Where were the sellers at? Yeah, there's a little bit of compression right around 5,000. Not much, though. Where were the sellers at here? 48. So this would have been the sellers right in front of 5. Back was against 5. Pullback. Now we broke. Where do we go from here? 6,000. Next port of call. We're not going to reinvent the wheel here. So would I be looking to scalp in front of those levels? Absolutely. Scalp right in front of 6,000. Scalp in front of 45,000. How do I trade the S&P 500 today? Do I want to be long or short? There's your PPI level. There's your opening bell, Wall Street opening bell, ding, ding. I like to focus on the U.S. session 30-minute chart when I'm trading equity index futures. It's not a bad trade right there. That's a great scalp, 58.04. You got a nice bounce there. Sort of have a hammer formation there, which typically tells you that the worst of it's over. Let's go take a look at these E-mini S&P 500 futures. Look at this. I mean, this is bullish participation, but you're only up about 0.75%. So it's not like you're in a trend day, the trend day of all trend days. How would you trade it? I go right there to the beginning of the trading day. Wall Street open, opening bell, ding, ding. Why would we focus on that? Because that's where the volume is. That's where the volume is. You could also, if you wanted to, you could go right back down here and you could launch this thing from the CPI range if you wanted, or the PPI range, excuse me. But I wouldn't bother. I really wouldn't. I would focus right on that U.S. session because that's where the volume is. So what did we have? Well, we had an interesting sort of check up of 38% right there, which is 58.49. I would absolutely love to buy 58.50. Excuse me, I can't talk anymore. So what do we want to do? Do we want to buy or sell? We can buy. I mean, there's no real problem buying the market right now. We're at really a key support zone. But what I'm focused on is what happened on that first touch of that 38%. Okay. Now think about what we're doing. We're trying to get with the pressure. We want to get with these buyers. We understand this is a massive 1 hour directional move. Bang, bang. There was compression, basically a flag formation. And then we broke out right to 38%. So what do I want to do here? Well, we scalped from 38% to try to get back in on that bullish price action. And was it a great trade? Absolutely, it was a great trade. What's your entry point? Entry point's right there. Okay, 58, 49, 75. What's the low there? Low there is 58.49. We took a 3-tick draw and price went all the way up to 54, 20 ticks, 21 ticks. That's a beautiful trade right there on an intraday scalp. Second time down, you got a little bit of compression there, maybe a couple of scalps here, and then we washed the area out, then we get the big rally. Now what are we doing? Well, we just went long just because we're above 38%. How's our entry? It's not that great. Look, we're only a few bucks in the profit here. Was it good though? Is it good enough really to make us any money? I don't know. I mean, it's working. We're up $200 right there on 4 lots. I mean, what are we up? We're up $250 on 4 lots now. It looks like we nailed the entry. Do we want to take the money? We could. We have justification, or we could just, maybe this thing's a runner. Maybe we come right here and move our stop loss to break even +1 to cover our commissions and try to run this thing on a breakout. Personally, I would just take the money and go home. You're up $200. No sense in really watching this thing retrace. I don't know. Personal preference. But these 30-minute charts, when you get a market that's moving, this is a textbook P formation. I haven't drawn a P in a while. Let's go ahead and draw a P. P formation. Capital P. P's are bullish. Run and rotate. And look, our entry wasn't even that great. Still up some money. Will this last forever, though? Do we tick higher at the end of the day? Maybe, maybe not. It's hard to say. Let me see. J-Ski, it looks like a bull pennant. That's exactly what that was. I mean, if you're a pennant trader, there's your run. See if I can find my triangle real quick. There's your pennant. Let's get rid of that. Never have been able to draw very well. There it is. Idea behind a pennant, great big range, tighten up, tighten up, tighten up, break. And that's what happened. We broke. So we're holding. We're doing all right there. I'm going to go ahead and flatten it. We're going to take the money off the board. In my opinion, this market could go either way by the close. But right now we would have to say that technically we're bullish. Bullish, bullish, bullish. Pretty good stuff, though. Intraday trading, it's not bad. Let's see. What else do we want to do here? We want to look at the U.S. oil market. Now, U.S. oil, over the weekend, anything can happen. Anything, and I mean anything. You've got all sorts of geopolitical uncertainty. You've got wars. You've got all sorts of stuff. What could really happen? Where would oil open potentially? I mean, it could open anywhere. I'm telling you that this is a pretty bullish week. Even though you're not, you're like, well, we were here Monday and then sold off. And then we're back sort of in the middle of Monday's range. Still looking at a weekly close above 75, and when we're halfway through October, I mean, that's an absolutely fantastic area to be, potentially, you hate to say it, but long. Now, we're going to talk politics and we're going to talk U.S. oil next week. I'm not going to open up that can of worms right now, but let's just set up a few levels for oil as we go into Monday's trade. Sort of in a log jam here. 62% with 75.81. Downside 75. Do you want to buy 75s late in the day? You could try to scalp from down there if you want. Just be careful. A lot of volume is going to hit the market here in about an hour, and that's going to be where we ultimately settle. I think there's a lot of traders in there that don't want to settle above 75, and there's a lot of traders that do. So I'm interested to watch the next hour. I think we're going to see some real heat right before that 2:30 Eastern traditional pit close. Usually you get a flood of volume right around there. 78% though, 76.95. That's probably what I would call a premium sell going into next Monday's trade. We're only about $1.70 off of that. I've watched WTI crude make that up, 30 minutes or 45 minutes. So I'm watching this closely. If we break up above 75 or 76, you remember that's 76.95. We'd be looking to sell price 76.89s and get a little bit of that bearish rotation off of that level. I think that's a real strong level. So we'll break down crude oil in more detail, but I did want to get that level out there, especially for Monday's trade, because that thing might get tested before we get in for the mid-session brief. All right, everybody, that's about it. I mean, just sort of looking around the horn. Great Britain pound, Japanese yen. This is the last one we'll cover here today. This was mentioned earlier. Pretty good stuff. There's your monthly. Nice big sell-off, and then that hammer formation. I talked a lot. I mean, it seems like a long time ago, but we're right in here somewhere about last month. I said, boy, that monthly hammer really suggests reversal, and it's worked like an absolute charm. So right now we're grinding higher. 197.40 would be my next port of call. I'd be looking to sell from right up there. What do you want to do from a shorter time perspective? I want to respect my numbers. Right now, that area, this zone right here, 194 is definitely huge downside support. So right now, I think you could get away with selling 197.42s and bidding 194s, 194.15, somewhere in there, 194 and a quarter. I think that's going to be pretty good stuff. Bullish Bullish, bullish, bullish. We'll keep a close eye on this pair next week. But listen, pound yen, I want to be long. I don't want to be short. I want to make my decisions, my mistakes to the top side. I don't want to make them to the downside. All right, everybody. I want to thank you guys for joining me this week. I'll be back next week, as will the powerful Connor Woods. He'll be back with his normal stream schedule. Mine's already locked in. He will schedule his when he gets back into the office, so that's probably going to be early Monday. You'll see all that work. As far as what we can expect for next week, the big event is the ECB. So that's what we're going to be looking at, the ECB interest rate decision. So we're going to be trading a lot of euros. We're going to be looking at the euros. For me, you're going to see a real interesting week. You're going to see a real interesting week. No real market movers scheduled. We've got a news cycle that's sort of died down. The geopolitical stuff's died down. I'm curious to see where it all goes. All right, everybody, have a fantastic weekend break. To my Montana Grizzlies out there, it's time to play some defense. Our defense has been struggling the last couple of weeks. Lost a close one to Weber State last week. Got Northern Arizona at home. Let's play some defense and get a W. I'll be in the stands yelling. All right, everybody. You guys have a fantastic weekend, and we'll catch you Monday. See ya.